Okay, so let's kick things off, guys. Good morning. Happy Monday. Today is April 20th. Happy Monday. Today is April 20th. Happy Monday. Today is All right, I got some feedback 20th. Going on here. I think I got both. Too many windows open. All right, so let's see here. So we've got, hopefully the delay is better today, right? I don't know if you guys are, it's about just a few seconds off, so it seems like it's okay. All right, so we've got market open in just about 1 second. There we go. All right, we've got our high and our low, and let's see here. We still have our liquidity sitting right under here. That's the New York low. There was another one that was formed here. I guess technically that is a swing, but I would use this, right? The one that the liquidity is plotting. Our all-time highs are right here. We've got the gap filled pretty much. Okay, and the all-time highs are sitting right here, so I feel like they're just gonna make a run for it. We are sweeping out this New York high right now, but I would not trust that just yet. I would look for price to continue up here. Let's drop down to the 1 minute chart here, and let's see what's going on. Okay, let's see here. A few seconds delay. Okay, that's to be expected. All right, there's the sweep above. Maybe we'll come down for these lows here. Nice bullish structure all the way up here, right? So once we hit the highs there, we get a lot of liquidity to come down and sweep out if we can get a run below. Okay, I am expecting price to give us a reaction lower. I mean, everyone's expecting, you know, price to continue running up, obviously, but we did get price to fall just short of the all-time highs by 3 ticks, right? Then we had a nice big gap down, right? And now the market is doing the sweep above the New York high here, or the pre-market high. Right, we've got our change of character in about 3 seconds. Confirming this. There it is. Okay, let's see if we get a retest of this level right here. It's a nice opening move here. Let's sweep out some of this liquidity and then let's see if we get a move back up. This is our low, our New York low here. We have lots of divergences firing off as well. There's the 50 level. And there's the retrace back to the change of character. Right, trading back into this and retesting this level here. Normally, if we were looking for a short setup, right, if, you know, this would be a short setup here, if we get an internal high, right, or if we get price to trade into the imbalance. Let's see if we inverse this. If we do, then we'll probably just go straight up. Oh, there's a divergence, and there's potentially the inverse right here. Let's see if we hold this level. All right, so we've got divergence, right? We've got price trading back into this 1 minute OB here, not quite a 15 minute. Let's see what the 15 minute OB would be. The next one up would be right here, right? The change of character line. So ideally, I'd like to see price come back to this down move here, although we didn't get quite that far down. So not quite down here. We got the divergence, and then we get this nice push up here. It's probably going to be the push up that takes us up there. All right, we still could hold this high and this level here, right? So I'm not counting this out just yet, but the closure above on this candle there, right? That gives us the inverse. Let's see if we get a retracement back in. Okay, so we got order block, divergence, right? Now change of character back up, bullish. Inverse the imbalance. Okay, now long position off of this high here would be, let's see how big a stop here. It's not too bad actually, 65-point stop, and then a run to the high here would be about a 1-to-1 just before it. Okay, let's see. I will take it if it runs back above this level. So we get a bounce back into this inverse and we close back above here with a bullish candle. That is good too, but I want to see a bullish candle. And that's why we wait. All right, let's see if we can tag this 780 psych level right into this imbalance right here. Did we tag it? Let's see, 779.75, right? Exactly one tick off. Okay, that's a good reaction. Now just give me a bullish candle that closes above this and we're good. Okay, my stop can be just underneath, about 50 points if we get right around here. So I want the entry to be around this 800 level. Oh, no closure above yet. No, no, no. We wait. Okay, 8 seconds. This could be it. Do we get the closure? No, we don't. Never mind. Let's wait. There's a divergence. I like that. All right, so my entry is going to be around 805 if I can get it close to this line. Stop will be just underneath the imbalance here, and this divergence low. It's around 50-60 points. And I need to see it respect this inverse here. If we close below it there, then we're likely going to go lower, and then we'll probably run down to our original areas that we're looking for, which looks like it might be doing that. Right, so let's hold off on this a little bit, because now we're inversing back below, right? So now it's looking like a sweep back down, and that's a pretty strong candle. So maybe we will get our sweeps down here, right? So what was the level we were looking for down here, right? This order block. Okay, so what's down here? There's an imbalance right here. So yeah, this could be where we look for price to come down to, into this consolidation. That's a nice move down. So did we have a short setup to take this? You know, we actually didn't have the internal swing, right? So there was no internal swing to sweep here for this. So this would have been the only move down. We could have taken it right off of the retest of the change of character, right? Or the retest or the closure back below, the inverse back below the imbalance here. But we're so close to this level here and we're still bullish, right? So just trading against that would be risky. But let's see. I mean, we would have, this would have been the entry. Stop would have been above this high here, about 70 points, right? And then we're going to go for a 1-to-1, which would be down here, right? And that would give us our sweeps, but this is the area we're looking for price to hold. So that would be, like I said, a kind of a risky 1-to-1 against the trend. But let's see, we got another sweep here. So this level's being taken out. I like this move now. Let's mark this out here. We've got sweep of a level, close above. Now let's see if we inverse this. We have to inverse this and balance back up for this to be valid. Otherwise, you can see here, right, we would respect it and we keep going lower. So we'll keep moving below to these levels down here if we can hold this imbalance. There's another divergence, fired off. So if we can get a tap into this OB, right, and then we can get a move back above this high, that would be our change of character, and then we would look for the setup from there. But I like the sweeping action here, right? I just need to see some confirmation. So 25 seconds for this to be a swing high. You can use this as a reference point. For now, looks like it's still holding, but it's very, very close to getting run through. Okay, so what I'm looking for it to do now that I've got a swing high here, I want this to now come down and sweep out this low. So I want another internal sweep like this. Okay, and then I want this order block to be the higher time frame point of interest, right? So we've got our step 1, higher time frame point of interest. Step 2, our sweep of liquidity, right, which is this low. Step 3, imbalance displacement. Step 4, change of character inversion, right? Then we get our retracement. Then we get our range. Then we look for our POI here to hold, and then we look for the move up. All right, make sure you guys download the checklist if you guys don't know what I'm talking about. That is our 5-step checklist. That is what we use for our entry model confirmations. All right, so if you don't have the checklist, you can download it for free, print it out, and then you can follow along with us with these steps so you know what we're looking for. Right, so far so good. We can also see if we get a divergence, right? So if we don't take out this low here, would you get a divergence with ES or YM? That would also count, right? And then if we get back above through here, then that would give us our bullish confirmation that we're looking for, right? We just saw a 15-minute imbalance, right? So the 15-minute candle just closed, and you saw here, right? We formed a little imbalance. Okay, so the indicator has plotted that out. So, it's supposed to, the order blocks and imbalances should be gone once they're mitigated. So you can see here, like we have this big imbalance here. So it works a little wonky with gaps, as you can see. So obviously we've clearly mitigated this, but it hasn't gone away. So, you can just consider this mitigated, but for gaps, it just, works a little weird. I don't know if I want to fiddle with the code to fix that, because it might make something else break. But I could try to fix it, but it's not that big of a deal. Is James here? Yeah, James is here. All right, so James asked me to put in the midlines for the order blocks and balances, so I'm working on doing that. So that should be done a little bit later today. So you guys can have the midlines like I have here on the rectangles. And you can toggle those on and off. I'll make it so you can toggle them if you want them on there or not, because they might be distracting if you see a whole bunch of lines on there. But expect that to be updated today. All right, so it's slow, but it's doing, slowly doing what we want here. We want this level here swept, right? And then we want to see that change of character. So come on down. And like I said, if we do see a divergence here, right, then we won't expect it to be taken. We'll just look for the break above then at that point. And then we can look for a bullish setup on that low.
Hey Jeff, how do I shorten my OB? Mine's stretching all the way to,
Yeah.
to the right there.
So they are by default, they're supposed to be extended all the way, but you can, if you see here, right here, extension type, it says infinite, right? So you can do this to bars, and then you can do the bar count, however many bars you want it to extend. The thing with this is that it goes by the time frame. So like on the 1 minute time frame, 50 bars. Let's see, let's go back over here. Yeah, so now here, see, so you can extend it to however many. Let's see, let's go back to, I don't know.
Yeah. All they did was give him shots, and they had to end up putting him behind the door. I told him that's how another place did. Andover did it one time down at Andover.
There's the extension there.
That's the first time he's been there to get shots, right?
No. But he wouldn't, I'm telling you, I had him doped up. He had his deal on, which ended up coming off. I had to take him outside, put that back on him again. He was trying to get him, boy. And he couldn't even hardly walk out of here when I took him out. He was so wild, I didn't think he was going to be able to get in the car.
So yeah, you can fiddle with that. I mean, I keep them infinite just because it's. I also have the colors, right? So you guys can adjust the colors. Like I have them very, very faint, right? So they're on my chart, but they're not like blaring on my chart. So like the transparency or opacity, right? I have it down to like 3%. See that? And then the border 5%. right? 3 and 5%. I think I have them all. You can see here. And then the color, obviously, you can do whatever color you want. But if you want the this one, the border should be at 5. Right, so I mean, you can set these however you like, but I have them pretty low so that they're not very invasive. So this one I didn't do quite. Right, and I didn't post those settings on the Discord post because, like I said, I just kept the aesthetics and the style stuff mostly out of it. Right, but you guys can decide how you want to, and then after you're done with it, just save as default, and then that'll be the default that it goes on your chart every single time. Oh, we hit our level. Let's see, did we get our sweep? Yes, we did. Okay, and we got our divergence. Fantastic, right? Now let's see if we inverse this, and we get our change of character here. This is pretty short, so I mean, we could use, and that's a pretty strong candle. So if we get a closure above here, we could take that. We could put our stop underneath here for 50 points, just in case it does want to come back one more time, although it shouldn't. And then we go for this high. We go for the 1-to-1 though, back up to the original. The only thing that concerns me with this is that our low, or pre-market low, is right here. So I feel like we should maybe want to come back for that. But this is a really nice retest, right? Retest the internal high, sweep of the internal highs, retest the imbalance, and then the push down into the POI. Okay, that was a good candle close. We did inverse. Okay, just need to close above here. Usually the inverse would be enough, but it's such a small imbalance. Like if this was a full inverse here, I think I would have taken it, but okay. So the difference between Forex and futures, obviously Forex is like currency pairs, okay? Futures is like, things like the stock market indexes like NASDAQ, S&P 500, the Dow Jones, right? You could also have futures on commodities like oil and gold. And then also the way that the platforms and the brokers are regulated are different. Okay, so we're going to take this entry here. Hold on one second. Let's get this. So let's just enter there. 768, 69, looks like 770-ish. Oh, no, we're going to retrace. Hold on. Let's go back. 60. All right, I'm just going to take it there. All right, so right here, 765. All right, our stop is going to go just underneath this swing here, 50 points. We're going to go for just a 1-to-1 here, right, back up to the top of the range. Okay. Yeah, I do have a video on that, right, that explains the differences between the Forex and futures prop firms and CFDs and things like that and the brokers. But it's just a quick and down and dirty explanation. Can't get into specifics, of course. But there are slight differences between trading Forex and trading futures. More advantages trading futures, mainly like things like the platforms on the futures are regulated by big entities, right? So everyone is trading the same price feed, okay? But with Forex brokers, there are lots of different brokers and lots of different feeds and lots of different liquidity providers. So, with Forex, there's a lot more manipulation, all right? So, like sometimes a broker could manipulate price on one platform and, you could get a whole different price on a different platform. The discrepancies sometimes are small, but like, they can whip you out of your stop. They can, charge big spreads, right? With futures, there are no, huge spreads and huge, price differences, right? Because everyone is trading off of the same regulated broker on the same feed. So a lot less prone to manipulation. And, you know, right. And then obviously the way we count, you know, with Forex pairs, you're counting pips. With futures pairs, it's ticks, right? And points. So depending on the asset, right, how many like ticks versus how many points, it could be different. Like for NASDAQ, it's 4 ticks to every point. But for something like gold, right, it would be like 10 points. Or sorry, 10 ticks rather for every point, right? So every asset class is a little bit different. Yeah, this is on the YouTube, Mr. Pips. So he's asking on the YouTube stream, so he can't see. He can't see what you're typing. All right, very nice move up here, right? We are now not safely in profit, I'll say, but we did inverse this imbalance over here, so that's looking very, very good. Okay, our take profit is right up here. I'm gonna do 50 points, right? So about let's say 815, because our entry was 865 or 765 rather. Okay, so now we have safely inversed this imbalance, looking very good to hit our take profit. So buying or selling futures, you don't use lot sizes, you use contracts, right? And so depending on what you're trading, there's, you know, so right now on this chart, we have the micro NASDAQ futures. So that's M and Q, but, and that's using micro contracts. So that's a smaller size contract than like a standard contract. So think of it like in Forex in terms of lots. Like if you use a standard lot, okay, standard lot size 1, right? That would be like 1 contract, but a micro contract would be like 0.1, like 0.1 lot size would be like a micro contract, right? So if you're trading, you know, on a standard chart, NQ chart, NASDAQ chart, then you'd use regular contracts, and that would be much bigger lot size, right? And so conceptually think of it like in Forex, if you're trading 1 standard lot versus 0.1. Okay, we got a little divergence here. We hit the top, right? So we're very, very close to our take profit though. Just a few more points, give it a little bit more push. All right, we may get a big retracement here, but we did inverse this, so I want to see if we hold the inverse. I would put it to BE, but not quite yet, because we haven't broken this structure yet, and we haven't broken above here yet. So I think that we're still going to mess around a bit. We might come back, maybe retest this, right? So we may come back to our break even. That's why I don't want to put it to break even right now. But we did get this reaction here, so I will be cautious though. So I want to see that, because we're getting this reaction right now here to the OB, right? And then we're getting this little like wick. So I want to see how this closes. We should close above it. And then the next candle likely will be bullish, but I don't really like leaving a big wick like this. So I really want the TP to finish out, because I know that if we leave a big wick, it's going to come back for it. All right, 3 seconds to close. And that's a good reaction here. We need the next candle to be very bullish, and we want to see this little imbalance right here get traded through. Okay, 5 seconds to close. It is bullish, but not as strong as I'd like it. Next candle, please be more bullish. Oh, we got divergence as well. That's very good. Okay, so come on. Let's get up there. I think I'll take profit just at this high here, so I won't push it anymore. Let's go to 805. If we can. All right, so 10 o'clock candle has closed. Let's take a look at everything off of the 10 o'clock close, right? So the candle is very bullish. So we would expect a retracement, and the retracement is covered by the stop, right? So it shouldn't retrace more than, than this, hopefully, right? We don't really have, I mean, we could also leave ourselves an imbalance with this candle here, right? So as long as it doesn't come back and close through this high, right, then we'll leave ourselves a 4-hour imbalance, which is also good for price to continue higher, right? And the stop will still cover that. Okay. If it does come down lower, right, if we actually come down to the order block itself here, then of course our stop will be hit. Okay, and that will be unfortunate, but c'est la vie. These levels here are already, like, we already mitigated that here with that wick on the 15-minute. We already got that 15-minute reaction, right? Stop is holding underneath that reaction there. So I want to see this now clean run through to the next high if we can. And so we might have to sit through some chop to do that. It is Monday, right? So, Monday is... it's kind of iffy for these types of things. And like I said, we might still get a move down because, prices, close the gap here. And there's nothing that says that price has to run this high. We do have a divergence as well. So price has already run the high on YM here. So, you know what? I mean, depending on how these candles look, maybe we'll play a little safe. Yeah, that divergence on YM there kind of is troubling. So I might take the break even here. Let's see what this candle does. $13, $12, $11, $10. All right, so if I take the break even, it's going to shoot up to the stars because that's what happens every single time. So let's see. If we can get back up to break even, I'll take it back out of this trade here. Let's see if we can get a close above here. Yeah, I don't like these candles the way they're looking here, but they are holding this order block, right? So I'm still okay. As long as we stay above that. I didn't want it to close below this one here, but this is really the move, right? This is our divergence, our sweep, right, and our change of character. So really, this is what's going to be holding price up, and that's why our stop is there, right? So, I'll hold it. I'll just take the 50-point stop. If it's a stop out, then so be it. But it should hold if it's if it's going to go up. And right now here at this high, we're expecting price to run the levels, but we're still in this kind of big consolidation. So we haven't taken our low, our New York low level here yet, which is why that kind of concerns me a little bit. But if it happens and we do get another setup out of it, we'll see if it does set up out of it. But a lot of times what happens with this is if I take the break even, I still have to wait for the price to come and set up for us again, and it's going to be a whole process. So we'll just we'll tough this out. We'll stick to the analysis. We'll tough it out, and we'll see what happens. It's a good reaction. I'd like to see it close back above, like I said, right? The level here. Just one more tap of the imbalance here, I guess, back into the OB, and then we get the closure above. Let's see, we didn't have really internal swings here. Yep, there's the close above. Okay. Oh, you did? Yeah, that's cool, Chuck. It's fine. It's not really doing anything too crazy, but it's also not really after this move here. That is certainly a scary shakeout move, right? Our stop is in the right spot, though. We do have the divergences in place, right? It's still holding our discount levels, so it's still looking good. And this is also the reason why I didn't put it to break even off of this push, is because I knew something like this could happen. So now we just got to see bullish order flow come back in and take this over again. Okay, so now we have wicks into the order block, and then we have a move away. We're still above the change of character line, which is this right here, right, on this move. So as long as we stay above that, we should be good to go. It's definitely not fun sitting through the chop, but like I said, no reason really to panic just yet, unless we start breaking our levels, right? So the order block here is still holding, the change of character is still holding. This obviously has been run through, so that is no longer valid. I don't like the close underneath the candles here. This could also be our internal sweep though, right? So like think of it in terms of our setup, right? We have our sweep, we have our change of character, then we have a retracement. We didn't really have any internal lows here, so this is our internal low. So we want to see this level now swept and close back above, right? And back into this. So right now I guess it's this order block, right? The bottom, the very bottom. And we have divergence, and we have a confluence with the 15-minute. Okay, so need this level here to hold and send price higher above this sweep. So we got the close above here with the wick. The next candle has to stay above, right? Has to be bullish. This is where I would take the entry on this, on this sweep here, right? We took it here a little bit early, I guess, because we took it off of the change of character. But waiting for price to come back, sweeping the internal, and then closing just like this is where we take the entry, and I think the entry would be the same anyways if it closes like that. Look at that. All right, so you see the model, right? We have the sweep into the higher time frame point of interest, right? So steps 1 and 2 fulfilled. We have the move away with the big displacement, change of character, right? Steps 3 and 4, inversion, and we have the divergence, right? Those are all 5 steps. Now price comes in, makes the internal low, we sweep the internal low, and that's the closure. That's our entry. Our entry would have been there anyway. So it's like the same entry basically. And now we got the push up. That's a very nice move after the internal sweep into the order block. Double divergence, triple divergence. Okay, and now we just got to see price cross through these thresholds, right, and get back bullish again. Leave ourselves a bullish imbalance here would be very good. I don't like the flat looking wick there, but okay, that is an imbalance. Let's see if we tap and hold. This is hovering at entry. All right, now I will reduce my stop, okay, to this low because I don't want to see price come back below it. So I'm going to just put it right at the midline here, I think 35-ish points. So reduce our stop a little bit. If this holds, it holds. If it doesn't, then we're likely going to go lower, and we're probably going to get a new sweep and a new setup. All right, so this has to hold here. I don't like that candle at all. Well, let's see if it holds it. Right, it's still enough for a little bit of a sweep here, but we already swept the level. We already got the reaction. If it closes through that, then you know that's probably not going to be our setup here. So let's see. Let's get another sweep of that level. Let's get another reaction here, and let's see. See if the divergences will hold. One more time. One time. Come on, we got a one time. It's fighting. Where's the 10 o'clock open? It is right here. This candle. Oh, that's actually pretty high. There we go. So near death. Saved again by some wacky volatility. There's the 10 o'clock open. We got to get through that. Biggest tease ever. All right, let's go. Come on. Push on through. At least get us above that bearish candle. All right, so we're above entry. We wicked the open. Right, so essentially what I'm doing is I'm hoping that this is the 4 o'clock, or sorry, the 10 o'clock to 2 o'clock candle, the 4-hour candle bottom wick, right? So price opens, we drop lower, we make the wick, right? And then if we close back above the open, then this is going to be that 4-hour PL3 candle, right? So the wick will be this portion, right? Then we close back above the open here. This will be the 4-hour wick, and then we get the expansion up to these levels up here, right? That's the idea anyway. Yes, you can trade multiple contracts just like Forex. You can put, I mean, obviously it depends on your margin and how much leverage you have and all that stuff, right? If you're trading your own accounts, you'll have a lot more flexibility. If you're trading prop firms, then, you know, you're going to have some limits as to what you can do, but you also have a lot more leverage. Back and forth here. See how it just keeps respecting that level there, right? One more time. Come back up. M15 OB on M1. Which one? Are you talking about this one? I drew that. That's not on there. Ooh, almost got stopped. My exact level is 725, so I'll put that. It's exactly 35 points. Right, or it's 30, 37. It says 37 here because it's, oh no, it's 40 points, yeah. So my entry was 765. Oh my gosh. Very close, 2 points away. Let me adjust here. This is 765. Okay, there we go. And, oh, one tick away, one tick away, one tick turn around. Let's go. Ah, there we go. Stopped out. Okay. All right. So no worries. We'll probably come down. Like I said, we didn't take out our New York low, right? So we'll probably come down. We'll take out our New York low, and then we'll get our buy set up. Okay. I took a reduced stop. So, you know, if the setup presents itself, I will, you know, see if it does, and then look to take it if it does. It'd be really unfortunate if it holds the original level here and goes up. But based on the price action, I don't think that's the case. I think that we will come down and take all this low, all the lows here, because it just doesn't look like it's giving us that bullish vibe right now, right? So either we come down and we sweep out these original lows here we were looking for in the pre-market back into this order block here. That could be the case. So this level here, right? And then we get that sweep back above. So the closure back above here, if we were to take a long from here, this is the 15-minute chart, obviously. But let's just say, you know, from a 15-minute perspective, if we keep our stop underneath the divergence low here, 70 points, and then we go back up to the highs today, then, I mean, potentially it's, you know, 2-3 hour trade if we can get it. Yeah, that divergence here, you know, obviously played into that, and I probably should have just took the break even, but like I said, hold the setup. You guys got to see that, you know, the analysis, you know, regardless of the outcome, okay, regardless of what the outcome is, Like we could have taken it, actually probably the entry was a little bit late here on this initial one. We could have taken it on the inverse like I said, but I just wanted to see price close above, and then if we closed above, obviously it took away some of our profit, right? So look at the difference. If we entered here on this inversion, right, and we took the low here, it would only be a 30-point stop, and then obviously we would get our 1R, we would almost get our 2R here. Okay, but we would probably be out at the 1R after inverting this and then getting to the opposing end of the range, right? That would have been completely fine. But because we were waiting, or because we got in here, right, the entry was just a slightly bigger stop, and that just prevented us from getting our 1-to-1. Taking the opposing end of the range here at 35 points was probably a good idea, but you know, I just felt like with the momentum and the way it was looking, it was gonna push up and take those highs. So you know what, no worries. Yeah, like I said, the setup was there, everything was there, right? In this, and you could have all points of the checklist still, you know, confirm and fire off and still end up losing the trade. But that doesn't mean the setup, you know, the direction still is valid. It's probably just the timing of where we're taking it, right? So now here you can see we're at divergence, right? So now this low on ES and YM have been swept, right? But on NQ we haven't. And now we've got ourselves a divergence sweep into this OB. These lows here are taken now, right, as the internal swing, and then, you know, now maybe we get our confirmation now, right? Like I said, if I kept the the original stop here and now it goes up, it's gonna be one of those things. That's another thing, is, you know, trusting the analysis and putting the stop in the right spot, right? Putting the stop where it needs to be in order to let the trade play out and have room. I saw the confirmations though, so I'm justified in you know what I was thinking about putting the stop or moving the stop up here, because I saw those confirmations, and that's what we needed to see for price to continue. And the fact that it didn't, right, means that price was inevitably going to come back down anyway. So, you know, right now we have bearish structure holding, right, and it's possible that we still continue bearish, high to low, right, off of this structure here, and this order block and this premium holds price and moves price down like so, right, into our next POI zone. Yeah, if this stops me out and just goes to take profit, I'll be upset. But hopefully we get another one that sets up later in the afternoon, if there's nothing else that sets up here. I mean, ideally, like today's setup was the initial short out of the high sweep here. Okay, but I mean, it was even taking that setup, look at like the amount of chop that we'd have to sit through. So, you know, we could have, let's see, ideally, after the sweep here, we got the change of character, right? We were looking for price to retest the change of character, retest the imbalance, or retest the order block. So, like the entry, let's say, just touching and mitigating the change of character here. Let's say the entry was there, and our stop would have had to been above this manipulation, obviously, so 50 points. And then this is the result, right? So the result here would be, there's our 1-to-1, and we'd be out. But if we had held, you know, for let's say the low here, right, the opposing end, we would have to sit through all this drawdown, okay, and then this is what would have played out again back to our 1R, right? And then again, if we had tried to hold for this and it didn't get there, now we've got a pullback, right? And now we're sitting through here with, 17 points profit and sitting through chop. So maybe Mondays, right? Best to always just take the 1R, or, you know, like I said, 30 to 50 points is really all you need. You don't need more than that. Sitting through the chop is really, sometimes not worth it if you can just get your allotted contracts and dollar amount for the day. Because if you're trading two contracts, two micro contracts, right, that's $4 per point. Okay, so if you're getting 50 points, that's $200 for your day, right? And that's all you need. Multiply that across however many accounts you have stacked, right? And that's a 5 accounts. That's $1,000. You don't need more than $1,000 a day, right? Some people do, but and then from there you scale 5, 10, 15, 20, whatever. And look at that. It is continuing up. We're back at our original entry now. Just had to do one more shakeout. Basically shake me out, and then it could go. Let's see where this came down. I had 716, so we came down below 720. Sometimes, if you put your stop below a psych level, right? Those are nice areas to keep your stops as well, right? Not just like random swing lows, but like if there's a swing low and there's a psych level around that swing low, it's always good to put your stop like around that level. Yeah, look at that. So we should have kept our stop where it was, but now we've got our change of character here, right? So the down move traded through now. Above this level, let's take a look at the 15. How does that look? All right, so 10 o'clock candle. $10 to 10.15 bearish, right? 10:30. It's looking like it's going to be bearish, but we still got 2 minutes left, so anything can happen. Oh, look at that. Yeah, so I don't know. It just doesn't look very bullish right now. It looks like we're kind of inducing longs. We're again teasing that all-time high level. And if we go to here, you can see price is respecting the gap, right? Not like last week where we kind of just ran through the gap. Where was it last week? Last week we ran straight through the gap, right? And we kept going. So for kind of the bigger picture and the longer term perspective, you can see that there's not much liquidity up here, since we've taken everything all along the way, right? So now it's just all this stuff that's like up here, right? Which is still, there's probably still a lot up there, but if we get a retracement or some kind of move down here at these highs, respecting that high, that becomes very, very powerful, because now we've got, just like, as I've showed you before, how liquidity is formed and how we respect these levels here, right, on these bigger time frames. We make those equal highs. Price goes lower, it starts to tank, right? It induces all of the retail to go lower, because now we have price respecting a previous resistance, right? A previous high. So now we got an M pattern. We've got price, forming a double top. We've got price respecting an old high. And then if we start to move down, now we have a lot of sellers piling in, right? And that in turn creates more liquidity up here, right? That we have already previously taken out. So now we need to build more, and we need to induce more. And so we sell off, right? Create that sentiment, build that liquidity, and then we'll eventually come back again. We'll come back up for those levels. right? So the question is always, you know, how far down do we retrace, right? As far as structure goes, you know, like the daily and the 4 hour still are very bullish, right? There's no, you know, there's no indication at all that this is going to be turning around just yet. No 4 hour changes of character. We haven't traded through any of these bullish bearish candles, right? So far, everything, price is still being supported with these bullish candles, or the bearish candles here, right? So 4 hour OB, like so, right? So we could just be trading back into this 4 hour OB and then looking for price to push up from there. Right, which is why I'm saying coming down here, sweeping the original level we were looking for here today into this order block. Oops, this over here, into this order block like this, right? And then looking for price to push from the OB here into those highs. It's still bullish as long as we hold this structure. And this is the divergence low from the Asia sweep, right? So we already swept Asia. We're not expecting London or New York to come back and sweep London and Asia because we already did that. I guess technically we could sweep London lows, these lows here. That would be crazy though if we did that. If we did the sweep like this, right, and held that and just came down for this and then went up. All right, so the retracement we got that came back up to entry was again taken away really quickly. All right, so like I said, the order flow is not in the bull's favor right today, even though it's a lot of chop here. More so looking at, you know, bigger moves down, right? You have short retracements up. I guess this was a big one, but still we respected that high and we went lower, right? Short retracements, bigger moves, short retracement, bigger moves, right? And the move is pretty immediate. So we have a fast up and then we have a fast down right away. So this would be like a railroad track on 15-minute engulfing, right? We closed engulfing here on the 5. 15-minute, we just closed another bearish candle. So making our way steadily towards our lows here. Right, we're about to hit our bottom end here. Like I said, the swing here is, I mean, it's so like borderline. I would just treat this as the low, not this one. So would like to see the sweep out of this level here into this big order block, and then we see the move up after that. And then even if we don't get all the way back up to the highs here, at least that should give us a good push back up into the range. Even if we're, like I said, we are going to continue bearish. Then we get a move like this into this range here, into this premium, and then maybe we sell off, right? This portion of price right here, if you catch this long, is still going to give you 1-to-1, maybe even 2-to-1, depending on how high we get up. And we're still respecting the higher time frame bullish structure, right? So as long as we're above, like I said, this 4-hour structure, this 4-hour order block, I would still be looking for price to hold here and go higher, right? Until we get this breakdown and we trade through this level, right? Then we can start to look for the shorts, right? Then the order flow would shift back bearish, at least on the 4-hour. And then the daily would probably follow suit after that. We get a daily candle that's bearish, and then, you know, we come down and look for price to trade back into these imbalances that we did not trade back into on the way up. There and there and there, right? And then that, like I said, would start to build in that short sentiment in the market, right? And this level would be holding, right? Everyone would see that as a hold, and everyone would see this as a double top, right? And then start to pile in, start to short. All right, so I think we can just call it here for today, because obviously we have to wait for price to come down and sweep out the level, right? Trade into the order block and then give us our setup. So this is looking like it's going to be probably an afternoon setup for us. So I'll, you know, if I do see it happening, right, after we see the sweep, I'll call out the sweep and we'll see if the setup forms after that. And then I'll post it in the Discord for you guys if it happens today. Like I said, it's Monday, right? It's still early, right? So, you know, if it doesn't happen today, we still got the rest of the week, right? Don't worry about it. The Mondays are normally going to be like a day like this, where it's going to be heavy consolidation, rangy moves anyway, right? But we did get the respect of the gap here. Let's see if it does follow through, right? If we do get the setup here for the bulls, it'll happen, you know, like I said, later in the day. And if it doesn't, then, you know, we'll just wait for tomorrow. We'll see what tomorrow brings. All right. Unfortunately took a loss today, but it was a reduced loss, so I'm not too fused about it, because obviously all of our criteria was met, right? And that's the best the best we can do. Break even or reduce loss in that case. Okay. Yeah, good stuff, guys. If there's any questions, let me know. Just post them in the comments section, right? But if not, enjoy the rest of your day. Good luck with your trades. We'll see you back tomorrow. Same time, same place. Awesome, guys. Take care.